What's up, everyone? This is Anthony Pompliano. Most of you know me as Pomp. You're listening to Off the Chain, simply the best podcast in crypto. Let's kick this thing off. Parker Lewis is the head of business development at Unchained Capital. In this conversation, we discuss Bitcoin, the value proposition, why people should care, and then we go through each of the latest writings of Parker, including the ones titled Gradually Then Suddenly, Bitcoin Can't Be Copied, Bitcoin is Not Too Volatile, Bitcoin Does Not Waste Energy, Bitcoin is Not Too Slow, Bitcoin Fixes This, and Bitcoin Not Blockchain. I really enjoyed this conversation, and I hope you do as well. Skirt, skirt! Want to know who has the best URL? Crypto.com. That's right, Crypto.com. They're a crypto platform with one goal, motherfucking mass adoption. That's why we're all here. We're trying to get crypto in every wallet. Crypto.com is helping people do that through buying, earning, lending, and card payment. Everything you could want at Crypto.com. Go help your boy out. Tell him Pomp sent you. Download the app or visit Crypto.com. Pomp's got you, always. Ever wanted to get into mining and didn't know how? Don't worry, your boy Pomp's got you. Everybody got some electricity and Wi-Fi. All you got to do is go to coinmine.com. You buy a coin mine. It's like an Xbox or a PlayStation that helps you turn your electricity into Bitcoin. That's right. You purchase it. It shows up at your doorstep. You pull it out of the box. You plug it in, connect to your Wi-Fi. 5 minutes or less, you're mining Bitcoin. All you have to do is control it from the mobile app they provide, and then you receive over-the-air updates that add new coins and new features on a consistent basis. Kind of like how Tesla does over-the-air updates and updates the car software. Just you're updating your coin mine. Consumer mining made easy. That's right. Go to coinmine.com, tell them Pomp sent you, and thank me later. As many of you know, crypto investors store their digital assets on exchanges or in cold storage for long-term safekeeping. However, this strategy doesn't help them grow their investment holdings or build overall wealth. With the new BlockFi interest account, users can now securely store their Bitcoin or Ether at BlockFi and receive 6% annual interest paid monthly in cryptocurrency. 6% is an absurdly high rate. It's the best rate in the industry. I highly suggest you go check out blockfi.com/pomp. Again, that's blockfi.com/pomp to sign up and start earning crypto today. If you follow Bitcoin and crypto, you've probably heard of eToro. They're the world's #1 social trading platform, and I love it. They've got more than 10 million other traders that love it too. And guess what? They just launched in the United States. eToro offers access to the world's most popular cryptocurrencies, including Bitcoin, Ethereum, and others. With the smartest trading tools and the ability to connect with the best traders around the world, there's no better place to build your perfect portfolio. If you're new to Bitcoin and crypto, you can test the waters with their $100,000 virtual trading feature. But if you're more experienced, you can create custom technical charts and use eToro's social feeds to inform your trading decisions. They've got transparent fees, and so you never miss out. They also have an easy-to-use application available on iPhone, Android, or any web browser. You can get started today in just a few clicks at eToro.com. Again, that's eToro.com. Get VIP access to Bitcoin and crypto markets today.
Anthony Pompliano is a partner at Morgan Creek Digital. All opinions expressed by Pomp or his guests on this podcast are solely their opinions and do not reflect the opinions of Morgan Creek Digital or Morgan Creek Capital Management. You should not treat any opinion expressed by Pomp as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. This podcast is for informational purposes only.
All right, guys, bang, bang. I am here with Parker. We were actually just having a conversation, and I said, stop. We need to just go record this so you guys could all hear this out. Thanks so much for doing this.
Yeah, absolutely. Glad to be here. In Wyoming, the whole blockchain task force, WYO Hackathon. Happy to be up here and learning how we can help Wyoming and advance the Bitcoin community up here.
For sure. Let's start with just your background. You've kind of had this pretty interesting journey to Bitcoin, and then once you saw it, kind of some of the things you've done. So just start with what you were doing before Bitcoin.
Yeah, so I was working for a hedge fund, global macro hedge fund at the time in Dallas, Unchained Capital. It's a fund run by Kyle Bass, kind of when I first started working there, it was distressed credit, long short equity, but over time, a lot of the focus of the fund was global macro. And so that was at the time that I was also starting to learn about Bitcoin, 2014, 2015. Didn't really start to click for me until 2016. Once it did, went full down the rabbit hole, partly as a function of doing research for the hedge fund that I was at, but also just trying to re-educate myself on what money was. And so the more that I started to understand not only why Bitcoin exists, but also how it worked, I became more and more convinced that what I wanted to be doing with my time was not working for a hedge fund, but going to figure out how I could contribute to the Bitcoin ecosystem and create value.
For sure. And so today, what are you doing? Because you were there, you did a bunch of work with Kyle, went really deep on Bitcoin, how it fits into that global macro environment, what it meant for institutional investors to try to get access to it, et cetera. But now you've gone kind of full-fledged and jumped in the crypto world. So you talk a little about Unchained and what you're doing there.
Yeah, so I lead our business development efforts at Unchained. So helping to guide the strategy, kind of form a vision around what it is that we want to be. And really what that is kind of recognizing a world where we're at this very early point in the shift in really the global monetary order. And if, say, 1% of people own Bitcoin and 99% don't, how can we contribute to that? And really where we focus our efforts is helping people better secure their Bitcoin. So we offer a Bitcoin multi-signature vault, which allows people to control their own keys, and we aid in that process and help add incremental security to someone who is currently facilitating self-custody, generally with a single key. We also offer lending. One of our monikers or principles that we live by is friends don't let friends sell Bitcoin. So we also lend against Bitcoin, which does have risks and trade-offs, but one of the primary reasons why people borrow against their Bitcoin is because they don't want to sell it. Mm-hmm. So it represents a tax efficient way to access some dollar liquidity while preserving an appreciating asset and a very scarce asset.
For sure. I love the friends don't let friends sell Bitcoin. Internally, we joke all the time, and it's a joke, but we say selling's for nonbelievers. Right. Right. Same sort of theme there.
Yeah, and it's really one of the other things that I've started to work on as part of my function with Unchained is a new series that I've been writing on Bitcoin and kind of helping others in hopefully a more accessible way to understand partly my path, but then also in just a broader educational effort to help people understand what is a very complex medium of why you don't want to sell Bitcoin and why you should be accumulating it, because I think for anybody who's around the periphery, they can see from the outside looking in a very volatile asset. Why would I ever do this? It seems very esoteric and very complicated, which it is, but the more that you understand about how it actually works and why it exists, the more conviction that you have, and as a consequence, the greater your ability is to manage your own exposure to it, your own portfolio, and to remain in it and to tolerate the significant swings.
For sure. So I definitely want to get into the writing because, frankly, it's fantastic. It may be one of the better series that I've ever read. But before we get into that, let's just talk about Bitcoin in the global macro environment, right? So, you had the pleasure of working closely with Kyle Bass on this, who we've had on the podcast, and I think has a lot of, I would say powerful thoughts around global macro and then something like Bitcoin, how that fits in. Maybe give us your view on where does this fit in, and then how do you see that evolving given some of the macro environment developments that are occurring today, whether it's the U.S., the repo market issues that we're seeing, China, Hong Kong, all that kind of stuff.
Yeah, absolutely. And that, one of the ways that I also came to Bitcoin was I was independently doing research for Heyman on Bitcoin specifically, but separate and apart from that, I was also doing work on the financial crisis. Obviously Kyle has history having shorted the subprime crisis. I wasn't at Heyman at the time.
And just so people understand, Kyle is probably one of maybe 6 people who not only shorted the housing crisis, but made a very large bet from an aggregate dollar amount, obviously was correct, and kind of built a reputation around having this contrarian thought that ended up proving out. And so that's what Parker's referring to.
Yeah, and so at the time, this was 2016, 2017, the Fed had begun or they had basically tapered their incremental purchases. They had begun raising short-term interest rates, but they hadn't touched the balance sheet. And so the work that I was doing, independent from the research I was doing on Bitcoin, was really understanding the the transmission mechanism of quantitative easing, and trying to understand what then would happen when the Fed unwound its balance sheet, which it ultimately began in November of 2017. And so as I was going down those parallel paths, they ultimately converged with the principal conclusion that essentially where QE starts and ends is really the why of Bitcoin in terms of what it is here to disrupt and what problem it ultimately solves. And so the way that I look at the macro world is and this is something that as part of my own education in kind of reading resources like the Bitcoin standards, but really re-educating myself or really educating myself for the first time on what the question of what money is. And I think that's really the context that people need to think about Bitcoin is, it is competing with the legacy monetary system. And principally the dollar as a reserve currency, the euro, the yen, really fiat systems anywhere. And when I think about kind of the Fed and the global context, it is that the global credit systems and the way that they're constructed require, not as a possibility, but as a necessity for those systems to continue to exist, QE is an inevitability. Without additional QE, those credit systems would collapse on themselves. And so I think, and we can talk a little bit about what's happening in the repo market, but if we expand out from kind of the initial kind of 75 billion of injections, it is there's a lot more to come, and it's not in the order of magnitude of tens of billions. It's trillions of dollars, and it's not just the Fed. It's the ECB, and it's the Bank of Japan, and it's really any central bank that has the ability to do it. And the root cause of that is that the financial system, as it's constructed, is massively levered. So if we just think about the dollar system alone, there's about 73 trillion of dollar-denominated debt, excluding derivatives, just fixed liability, fixed maturity, as tracked by the Fed. Today in the banking system, there's only about 1.6 trillion actual reserves. So every dollar is essentially leveraged 40 times over. That is the consequence of 30 to 40 years of every time the credit system has tried to readjust or has tried as a system to delever, essentially been sustained as a function of smaller QEs along the way that ultimately lead to kind of instability in the credit system, which we're starting to see where if banks want to access overnight credit in the repo markets, paying 10% interest, like that is a sign of liquidity strains. The only way to solve liquidity strains is to put more base money in. And so that's what we're seeing with repo. I think what we'll see very soon from there is, more large-scale asset purchases, so QE4, QE infinity. And then when you think about that in the context of Bitcoin, if the Fed system or the ECB system or the Bank of Japan system is dependent on a expanding credit system, it is as a consequence dependent on an increase in the base money supply. Bitcoin as a fixed supply reserve asset outcompetes that. And so for people who have the ability to opt out of the legacy system, and as they educate themselves on Bitcoin, they will see the contrast where each time, every 10 years, or I think increasingly so, we either go into a form of a credit crisis or an expansion of the base money supply. People will increasingly start to ask questions and say, hey, maybe this is why Bitcoin exists. Maybe this is a better alternative. And ultimately what we're going to see on the free market is a competition between two monetary systems, the legacy system that's dependent on future rounds of QE, or a free market system that tolerates volatility, but at the root of it is backed by a fixed supply.
For sure. And so, look, there's a ton here. And I think part of what makes it so exciting to, folks like you and I is that it's a very complex analysis, right? You have to understand what is money. You've got to understand some of the macro stuff. You've got to understand QE and central bank kind of incentives and tools at their disposal. You've got to understand Bitcoin, its technology, its monetary supply, right? There's just a bunch packed into what is a pretty simple analysis. Do I get exposure to Bitcoin or not, right? You keep bringing up this idea of like, what is money? Maybe talk a little bit about just like how you describe that to people today.
Yeah, and again, this is something that I think most people have never asked that question. And I certainly, I myself, up until 4 or 5 years ago, hadn't asked that question.
Same.
And I think that there are, especially those that look at the dollar system, there's confusion as to, or there's explanations that it's just a collective hallucination, or money is just a belief system. But I think at a root level, it is a man-made invention, but it is a tool that enables specialization in the division of labor. And I think in that context, and as I've educated myself, Nick Szabo's Shelling Out, Saifedean Ammous's Bitcoin Standard, thinking about kind of really at a first principle level why it is, let's just restrict it to a conversation about the United States. Why are 325 million people all walking around, willing to accept this form of paper or the digital representation of that paper in exchange for real world goods and services? And I think that discussion as to how the dollar emerged and why the dollar exists is a complicated kind of discussion. But ultimately, I think what people have to recognize is that there is rhyme and reason to money. There are inherent properties that make something a better or worse form of money, and that also our current economy and how complex it is with the degrees of specialization, the degrees of division of labor, our economies don't work without money. And money is ultimately the good that facilitates the coordination of all other economic activity. And that when we think about the properties of money, of something that makes something a better form of money versus a worse form of money, if we were reducing it to a few topics, it's relative scarcity. It's the ability to transact, so the divisibility of that unit, fungibility. There's a lot of discussion in Bitcoin whether Bitcoin is sufficiently fungible, and I think there's ways that Bitcoin will become increasingly fungible. But where we sit today, I view Bitcoin as equally as fungible as the dollar. And so when we think about relative scarcity, divisibility, portability, when you start to think about Bitcoin relative to other goods in the market, that is why it's emerging, and for the principal reason that it is finitely scarce. And prior to Bitcoin, no form of money was finitely scarce. Now, the explanation as to how and why Bitcoin is scarce is really the tangible question that when I talk to people, that's what I tell them to try to understand, because it isn't just some coincidence that it's finitely scarce. There's an interplay between the technical architecture of Bitcoin, the way that Bitcoin's consensus mechanism works, but also the economic incentives of the underlying currency that tie everything together.
Yeah, and I think that the whole idea of this finite scarcity is, I use real estate all the time, right? I say, look, if you look at the city of Manhattan, for example, it's an island. They're not going to make more land. And so what ends up happening is as more and more people want to move there or have ownership of that land, the price increases, right? And all of that is just simply supply and demand economics, which is a very simple idea. It's something that's taught in economics 101 and things like that. But because it is so simple, a lot of folks who either don't buy into the Bitcoin story and thesis, or those who ignore it, I think it's just that they overlook the simple thing. Right. And it's almost like it's so simple that they're like, no, there has to be something more. There has to be a more intellectually driven conversation. And some of it you're hinting at, kind of once you get past that supply and demand. But ultimately, that's where the quote unquote US dollar value comes from. Right. It's just as demand increases, if you have a fixed supply asset, the price has to go up unless all of a sudden supply and demand economics are invalid.
Right. And I think that, I think people fall out on two sides of this where, the first question is, I don't believe that it's actually scarce.
Yep.
And there's a lot of confusion around how and why that is, or why it's not the case that, if I just create another cryptocurrency that represents, in aggregate digital currency inflation. And so there's confusion around both of those points as to whether or not, Bitcoin independently can maintain a scarce supply, or how to think about that scarcity relative to other digital assets. And then beyond that, and this is something that I struggled with myself, it was this concept of, if Bitcoin has a fixed supply and its value continues to rise, if Bitcoin's 10,000 a coin or 100,000 a coin is too expensive for people to get. And really, that is a mental block that people have to work through, where it's, the way that and one of my friends helped me think through this, it's actually the more valuable, one Bitcoin is an arbitrary unit. The way that I think about it is I think about it as an economic system and the purchasing power of the network as a whole. And so if that's approximately 200 billion today, the more valuable that Bitcoin is, the more valuable it becomes. The less of a unit of Bitcoin that you need to transmit value over a communication channel, that network is actually more valuable. And so the people struggle with the fact that, how is the rest of the world going to be able to access enough, a certain percentage of the network to make it significant enough, and that really isn't the point. It's you just need a piece of the network, and as more people adopt Bitcoin, and as it's met with a fixed supply, the overall value of the network increases. It's not just that Bitcoin, denominated in dollars increases. It's that the communication channel as a whole increases in value because there are now more nodes connected to it. If there are only 60 million people transacting in Bitcoin, that's very limited. But if 1 billion people own Bitcoin and are transacting in it every day, the value of that network increases. And the only way to get there is by incremental adoption, which ultimately increases the value of Bitcoin.
It's the cell phone example, right? Just one cell phone in the world isn't very valuable. Even just 2 cell phones in the world isn't very valuable because you can only call one other person, right? It's when you have an entire network of thousands, tens of thousands, hundreds, and then ultimately millions of devices. Now that network becomes much, much more valuable because each person who joins is actually driving value in that network to some point. And so I think that that example is not exclusive to money or to Bitcoin. It exists in other markets. We just don't think of them that way.
Right. Yeah. And really, when you kind of get into various different layers of Bitcoin and start to understand the network effects, it is the more people that come into Bitcoin that just want to purchase it as an asset and use it, whether for speculative purposes or increasingly over time as they learn more, as a true store of wealth and as a way to convert the value that they create into what we all believe in the future will be a stable form of money. That increasingly those people then begin to actually contribute value by building infrastructure. I think it's probably an overuse, and I overuse it, but Rome wasn't built in a day. You don't have to be building infrastructure for Bitcoin or contributing as either an investor or as somebody that is curating content or creating content. If you create value in the real world and then choose to store that in Bitcoin, you are increasing the value of the network as a whole.
For sure. Holders are users, right?
Yeah. And then that's, what money is a store of value. And that if we think about it at a root level of converting time to value to Bitcoin or a form of money, and Safe talks about this in his book, where kind of thinking about kind of the time preference or what I consume today versus what I consume in the future. Anything that we're choosing to save is putting off what we could consume today for some future investment. And I think that there are serious, not necessarily consequences, there are massive ramifications as more people start to think about time preference, high time preference, low time preference, how they choose to spend today versus save, and then kind of how they think about the trade-offs. And I think this is a concept that Safe talks about, and it's really interesting where he talks about macroeconomics and macroeconomics think about kind of the trade-offs in transactions between different participants in an economy, whereas time preference is more of a trade-off between yourself and your future self. And so kind of thinking about Bitcoin in that context, the more people that are choosing to store wealth in Bitcoin in a stable form of money, I think there will be ramifications far greater than just Bitcoin and the dollar and the Bitcoin monetary system and the legacy monetary system. But if you have a world of a billion people that now are operating in an environment where there's a reintroduction of opportunity costs of money, there will be an increasing focus on productive activities. And so I think it's far-ranging in terms of the impact.
For sure. So I want to jump into this series that you've been writing. First of all, where can people go find the series? And then we'll kind of go point by point of each of the ones that you've published recently.
Yeah, so I publish generally every Fridays. I have, have been a few things that have come up that have prevented the last couple of weeks, but I release a post every Friday, and I post it on Twitter, but then you can find it on our blog at Unchained-Capital /blog.
Got it. All right. So the first one, it was kind of like a shot over the bow because I didn't even know this was happening. And then all of a sudden you write this thing gradually, then suddenly. Describe, kind of at a high level, what exactly you were trying to communicate in that first piece.
Yeah. So, and one, to give some credit, kind of over the course of the last year or 2 years, I had seen Marty Bent writing a daily newsletter.
Shout out Marty.
Yeah, and I know you write a daily or weekly newsletter. Safe wrote a book. One of the things that I think yourself and Peter McCormick yesterday echoed, that education is such a critical piece, and so I've benefited immensely from the content that others have created. We as an organization, kind of while we're trying to serve a certain kind of segment of the market that values self-custody today, we also want to help expand the knowledge base and bring more people into Bitcoin. And I think from my past, having worked at a global macro hedge fund, now kind of working every day within the Bitcoin spheres, kind of helping to create a bridge or an accessible medium that isn't necessarily as long as a book, but that can give whether it's family offices, other institutional investors, a look through into my own thought process as to how I've arrived from not ever questioning what money is to being every day full time working on building infrastructure for Bitcoin, and so that was the primary goal. It was to really distill for myself, but then to create a depository or a repository of not necessarily academic, but just educational resources to hopefully, if people are interested in the question of why are so many people interested in Bitcoin, that they can come and think about things that generally represent mental blocks. That's one of the things that I try to focus on is distilling complex subjects that hang up a lot of people, and explain, at least in the context of my background and the way that I think about it, how they may think about a certain problem that may prevent them from kind of advancing on their path of seeing Bitcoin as money.
For sure. And so the idea of gradually then suddenly, as you look at this, is this kind of the starting point of where you think people can kind of enter into the mindset of this isn't just speculative asset, there's an actual kind of more macro kind of systematic perspective to look at this specific currency, and that's why you started there? Yeah,
really kind of providing that big overarching 1,000-foot view, the question of why, and that's really where I started the piece, and the reason why I termed it gradually then suddenly, it was a term penned by Hemingway, and I think the sun also rises, but it was also the idea of one, how people go bankrupt kind of gradually then suddenly. That's very much how I think about the concept or context of the Fed's economic system, where it is a massively levered, probably massively insolvent system, and it's happened very gradually, but then when it unwinds, it happens suddenly. I think that the first crack in that facade was the financial crisis, but then it's also applies to the context of how I came to Bitcoin. When I was thinking about it, kind of like I thought of myself as staring at a wall that had a mural on it, but only seeing a blank canvas. And then there were a few kind of conversations or kind of talking with my friends who had been involved in Bitcoin for a long time, where then suddenly something clicked for me. And I, like in certain cases, I specifically remember like the place and time where I was, what the specific mental block was, and then what it was that helped me kind of overcome that. And so, a primary reason for writing this is thinking back to that kind of process that I went through, and then trying to distill those thoughts down so people can start there, and then they can move on to more longer form subjects like the Bitcoin Standard or Mastering Bitcoin, which I believe is a great resource, as well as Inventing Bitcoin by Jan Pritzker. So really it is for people who are have that question of what is this thing. It presents a digestible, accessible medium, generally 3,000, 4,000 words, where someone can sit down and then kind of start to peel back the layers of the onion.
For sure. And so the second piece you wrote was Bitcoin can't be copied, which is a pretty common yet relatively lazy, I think, detraction of just, there's Bitcoin and there's 2,000, 3,000 other tokens, right? So like it's just the same thing over and over again. What differentiates Bitcoin? But maybe talk a little bit about some of the thoughts in that piece of Bitcoin can't be copied.
Yeah, and I think it is a very, maybe shallow isn't the right term, but it's not a deep thought process, but it is one that's prevalent among a lot of people on the periphery. This idea that, there's 21 million Bitcoin, but there's 21 million Bitcoin Cash, or I don't know how many Ethereum there will ever be, but this idea that copying Bitcoin or creating a new digital currency does not replicate the monetary properties that are inherent in Bitcoin. And I think that this is the way that I communicated in the piece. It's, as kids, we're all taught that money doesn't grow on trees. And then suddenly Bitcoin, has its immaculate conception, and the way that I think about it is catches lightning in a bottle. When Bitcoin was released, it wasn't money. In the days subsequent, it wasn't money. In the probably years subsequent, it wasn't money. But that over time, monetary properties emerged in the network, and it's a little bit confounding to me that where we are at today in Bitcoin, where it's this emerging monetary technology protocol that currently has a purchasing power of about $200 billion. And if we look back in history and kind of skip past the emergence of fiat systems which leveraged gold, but really thinking in the context of monies haven't emerged on a free market since gold and silver, and those emerged over the course of thousands of years. Here we are sitting with this new form of monetary technology, and everyone suddenly, despite being taught and despite being hyper intuitive that Bitcoin or that money doesn't grow on trees, let's all just go create our own form of money. And so the point of that piece, Bitcoin can't be copied, was really trying to emphasize the things that make Bitcoin unique, and some base layer to think about why monetary systems converge to one, why an economy converges around a single medium of exchange and ultimately uses that medium of exchange as a unit of account. That while it should seem intuitive that everybody around the world shouldn't be able to create their own money, they in fact can't, and it's really based in the monetary properties that have emerged around Bitcoin, the censorship resistance, the decentralization, and ultimately those two kind of properties that are not inherent in other cryptocurrencies that really reinforce the scarcity that is Bitcoin's 21 million supply, because without those properties of decentralization, without censorship resistance, 21 million is not a credible number. But so long as it is, and so long as the value of Bitcoin increases, the network becomes increasingly decentralized, increasingly censorship resistant, which further reinforces the credibility of a fixed supply, which will continue to cause value to converge around the Bitcoin network because it's a better form of money.
Yeah, and it's interesting because a lot of times I talk about, or my answer to the question of like, what is Bitcoin is something different to different people, right? And so these elements of non-seizability, non-censorship, the hard cap, just a whole bunch of different aspects or criteria that have formed for this value that you're describing. Certain people find different aspects of that more valuable than the other aspects of Bitcoin, right? So if you're sitting somewhere and you're worried about people seizing your wealth, all of a sudden the seizability or the lack thereof it becomes super, super important, right? If you're sitting there and you're worried about censorship, well, now the fact that it can't be censored becomes really, really important. And it's not so much just that one group over another group finds certain elements more valuable than others, but also you as an individual may find different elements more or less valuable at different times as well. Right? You could see a world where at one point in time you actually really care about the fact that it's not seizable. But then at another point in your life, in a relatively short period or over a long period of time, now the censorship becomes important or the monetary policy becomes important. And so the fact that there is such a decentralized governance to this and the lack of kind of rapid change really allows people to find what's most valuable to them, in my opinion.
Yeah, and I also think about that, and I believe I wrote about this in the initial piece that I did, is that everybody has to come to this relying on their own life experiences. If they just looked at this simplistically based on what they had been taught in high school or college, or just looked at an incumbent economic view, they would never come to the view that Bitcoin is money in a vacuum. But that over time, as people look at this, they relate to it through their own eyes and through their own lens, and Bitcoin emerges as money to each individual for different reasons on different timelines. And then the aggregate consequence of that is that these properties emerge in terms of the overall network. But that Bitcoin, there wasn't a sudden point in time where Bitcoin became money. It becomes money to each individual as they educate themselves and as they kind of form a mental model as to how to think about it or what properties of that network are attracted to them. But then it's also in the context that it's always relative to something else. And so when I am choosing to store my value in Bitcoin, I'm choosing not to store it in another monetary network. But you can't do that in increasing ways without having formed your own perspective as to kind of how this helps you not only today but into the future. And that will always inherently be dependent on kind of each individual's own circumstances, their own life experiences, and the way that they look at the world.
Skirt. Want to know who has the best URL? Crypto.com. That's right, Crypto.com. They're a crypto platform with one goal: mass adoption. That's why we're all here. We're trying to get crypto in every wallet. Crypto.com is helping people do that through buying, earning, lending, and card payment. Everything you could want at Crypto.com. Go help your boy out. Tell him Pomp sent you. Download the app or visit Crypto.com. Pomp's got you, always. Ever wanted to get into mining and didn't know how? Don't worry, your boy Pomp's got you. Everybody got some electricity and Wi-Fi. All you got to do is go to coinmine.com. You buy a coin mine. It's like an Xbox or a PlayStation that helps you turn your electricity into Bitcoin. That's right. You purchase it, it shows up at your doorstep, you pull it out of the box, you plug it in, connect to your Wi-Fi, 5 minutes or less, you're mining Bitcoin. All you have to do is control it from the mobile app they provide, and then you receive over-the-air updates that add new coins and new features on a consistent basis. Kind of like how Tesla does over-the-air updates and updates the car software. Just you're updating your coin mine. Consumer mining made easy. That's right. Go to coinmine.com, tell them Pomp sent you, and thank me later.
One more word from our sponsor, BlockFi. Their new interest account allows you to securely deposit your Bitcoin or Ether at BlockFi and receive 6% annual interest paid monthly in cryptocurrency. This rate actually compounds, so you receive a 6.2% APY, which is very attractive given the alternatives. So you can actually take your Bitcoin, you can deposit it with BlockFi, and get paid an interest rate of 6% in return. Go check out blockfi.com/pomp. Again, blockfi.com/pomp. to sign up and start earning interest on your crypto today.
The next piece in the series is Bitcoin is not too volatile. Elaborate on that a little bit.
Yeah, so this is one that I think probably at deeper levels and more reasonably causes people to struggle around, okay, so there's a group of whack jobs out there saying that Bitcoin is money, but every time I look on the screen, it changes, 5% or it's down 20% over, a month or
up 20%.
Or up 20%. Like, how could that ever be money? That concept is foreign to what I know money to be. But realistically, Vijay Boyapati had a great quote on this Stefan Levere podcast where he said that, and I'll butcher the quote, but it was along the lines of establishment economists deride the fact that Bitcoin is volatile as if something can go from not existing to a stable form of money overnight. And what we're realistically seeing right now is the monetization of a good on the free market for the first time since gold. There's no way for that to happen without volatility. Right now, if again, I have no idea how many, literally how many people use Bitcoin, but thinking about it in the order of magnitude of 60 million or 70 million people, everyone is trying to figure out exactly what this is, what the future of it will be, how resilient it will be. What we're witnessing in terms of volatility is price discovery as orders of magnitude more people are educating themselves and beginning to adopt Bitcoin and beginning to, at a base level, starting out with a very small percentage of their wealth, but then as they learn more, increasing. And while that adoption is increasing by orders of magnitude, it's met with a fixed supply. Mm-hmm. So if we think about adoption waves, and again, we don't know specific numbers, but thinking of each adoption wave representing an order of magnitude. So from 2016 to today, maybe something like 5 million to 60 million or 10 million to 100 million, whatever it may be. It's that relative increase in demand met with a supply that over that same period only increased by 10%. Mm-hmm. That fixed supply is what creates the volatility, but it is also the fundamental source of demand. People are looking at this, they're starting to ask themselves for the first time in their lives, what is money and whether Bitcoin is a superior successor to the legacy systems. There's no way to educate yourself on Bitcoin and as a market to all of a sudden at one time converge on a stable form of value. Mm-hmm. And so the Bitcoin's volatility is a natural function of those adoption dynamics and the ultimate supply curve of Bitcoin. And that over time, if we think about the store of value, people in Bitcoin who have been around for a year or 2 years or 3 years, they think about it in the context of longer time horizons than day to day. And then in addition to that, it's important to recognize that Bitcoin doesn't exist in a vacuum. And so if you're an institutional investor and thinking about, how can I have exposure to Bitcoin with all this volatility? The way that I think about it is in the context of diversification of an entire portfolio. Mm-hmm. So Bitcoin's volatility is muted when you think about a 1% position or a 5% position, and what are the attributes or what are the volatility of other assets that you hold. But that when you look at the dynamics and why Bitcoin has a fundamental demand, that being that it has a fixed supply, that over any long time horizon that you look at Bitcoin, whether it's 3 months, 6 months, 1 year, 2 years, it is storing value. Whereas the dollar may be stable day to day, but if you look at the long-term chart of the purchasing power of the dollar, it loses value by design. Mm-hmm. And so central bankers all over the world have, chastised Bitcoin as being, no one uses it as a method of payment. It's too volatile to be a currency. When in reality, we're just witnessing price discovery on the logical path of a monetization of a good on the free market, which is, a fundamentally disruptive idea. Absolutely.
And I think that's part of the power of it, right? Which is once people understand that, then, as you said, I really like this idea of, because it was my journey, I think it's most people's journey, it's almost like you test it out a little bit, right? And you start to store a little bit of wealth, and then you gain confidence, you gain understanding, you gain conviction, really, and then it very slowly you start to put more and more of your wealth into this asset, and eventually, people start getting to very high percentages of their wealth stored once they're educated and they're convicted, which I think is, a lot of people will just follow that path.
Yeah, and I also think by definition, when you buy Bitcoin for the first time or make that leap, often likely for speculative reasons, you by definition know very little. Mm-hmm. And that first foray into it, or kind of, I don't want to say leap of faith, but the first time that you choose to do that, that's what sucks you into the rabbit hole. Mm-hmm. Then you have skin in the game. Then you're more interested in learning more as to why you just did what you did. And then the natural consequence of that is, if you're buying something knowing very little about it, you're making a less informed decision, but then as you educate yourself, you start to understand the how, the why, and your conviction level increases, which translates into becoming, as Trace Mayer would say, a hodler of last resort, and continuing to accumulate and continuing to shift the balance of whatever savings that you do have increasingly into Bitcoin. Mm-hmm. But you can only kind of get that education once you're already in the game.
For sure. The next piece you wrote is Bitcoin does not waste energy, and this is probably one of my favorite topics to talk to people about. But elaborate on what you kind of covered in this piece.
Yeah. So and this one I really swung for the fences, where there are a lot of reasons when you get into the kind of the brass tacks of the energy that Bitcoin does consume. There's a lot of kind of micro level explanations that we can defend the energy use of Bitcoin. So, and there are a number of them. It's kind of this idea that realistically the sources of energy consumption or production that Bitcoin's going to compete for are not going to replace or compete for the same energy supply that, say, powers your home. There's the idea that a large portion of the Bitcoin network in terms of the energy that it consumes is renewable, and that Bitcoin only consumes the amount of energy that the free market will bear, and that as a consequence of Bitcoin and because of the dynamics of the energy that it can consume, that it will actually lead to more stable energy grids, and that it will actually advance the development of renewable source of energy. I kind of stayed away from that aspect, but I really went to the first principles. And it's this idea, and I use Venezuela as an example, but before I even go there, it's the idea of kind of asking that question of like what money is. And in order to understand or to form an appreciation for the amount of energy that Bitcoin does consume, you have to have an appreciation for the problem that it's solving. If you do not have an appreciation for the magnitude of the problem that it's solving, the amount of any energy that it consumes will never be deemed justifiable. But then when you understand money and you understand that money is the backbone that allows our economies to function, it's the good that allows all other economic activity to be coordinated, you start to understand the weight of the problem. And then when you look at it in the context of, okay, what happens to an economy when a form of money hyperinflates? Looking at Argentina or Venezuela or even Turkey, there's a number of any hyperinflationary scenarios that you can look at, the economic consequences are devastating. And that and Safe has a quote about this where if Bitcoin prevents one instance of hyperinflation, then all of the energy consumed will be a bargain basement price. And it's that idea that if we think about kind of everything that we use in our daily lives is in some form or fashion an energy output. There's an energy input to create an energy output. And that money is the economic good that allows for the coordination of all those energy inputs and outputs to get things that we take for granted every day in our lives. So not thinking about the most complicated things, but just thinking about the basic things: food at the grocery store, basic healthcare, clean water, sanitation, those type of things. All of that is only possible with a stable form of money. And when you don't have a stable form of money, those basic necessities cannot be fulfilled. And so the approach that I took in Bitcoin does not waste energy. It's this idea that if everything that we consume in our daily lives is a derivative of some energy consumption, and if we want that to be sustained, then we need a stable money supply. So it's this idea that every other form of energy consumption is a derivative of money. So therefore, the best and highest use of energy should first be to secure the money supply, because if we don't secure the money supply, everything else is moot. And so I used an example where you look at Venezuela, and not just the fact that they have gone into hyperinflation, but recognizing that Venezuela is one of the most oil-rich or energy-rich countries in the world. And if you look at their energy production year over year over the last 5 years, it's plummeted. Literally, they can't get their trading currency or oil out of the ground because they don't have a reliable form of money. And so when we think into the future, it is not that Bitcoin is going to, the energy that's consumed by the Bitcoin network could otherwise go to power homes. And if we didn't have Bitcoin's energy consumption, we could, have, warm homes for 6 million more poor people. It's that if we don't have that form of money, everything else deteriorates. And so kind of the first order function should be, let's secure the Bitcoin network, and then everything else, will follow from there.
For sure. And one of the things that I think a lot about, and mainly one of my partners and I, Jason Williams, one of the first things we did in Bitcoin and crypto was we built a mining facility at a renewable energy plant. Right, so we had made an investment, and they take car tires, they turn it into oil, steel, and power, sell the oil and the steel. That power essentially was kind of OPEX free, right, because the business was profitable by taking the tires and selling the oil and steel. power source, build the mine right there rather than sell the power to the grid. Very economic advantage for us, but also we sought out a renewable energy source because low-cost power. I think a lot about the fact that there's almost this game of like cat and mouse or like hide and seek around the world of people who want to mine or secure the network. They are looking for lowest cost power. Lowest cost power is usually attributable to renewable energies. And so they are actively spending money, time, energy, intellectual capital to go seek out those renewable energy sources and then to help monetize them. And so if that continues to play out, can we actually drive innovation and drive the kind of build out of renewable energy sources simply because of Bitcoin securing the money supply?
Yeah, and I do think that there is merit to that in the sense that, and I'll use an example of one of our good friends in Texas, Gideon Powell, who's out building infrastructure in West Texas for greenfield mining, Bitcoin mining. And one of the things out in West Texas, there's obviously a lot of natural gas, but there's also an incredible amount of wind power and solar power. And so I do think that one, Bitcoin mining will increasingly go out to the periphery where the cheapest sources of power actually exist. And then it also incentivizes the lowest marginal cost of power. And Bitcoin energy consumption is unique in the sense that it's demanded 24/7, which is a dream for either an energy grid or an energy producer. When you think about kind of any network that requires a significant amount of infrastructure, whether it's a telecom network or an energy grid, there's generally peak demand and trough demand, and there's generally only a few points in during the year where peak demand is reached, or a few points in the day, and that the nature of Bitcoin's energy demand being that it's 24/7, specifically, where I think tangibly will lead to I guess innovation around technology in renewable energy, because one of the biggest challenges, and again, I'm not an energy expert, but it's just common sense that the storage of that of that renewable energy is costly, and it's one of the biggest challenges. But if you reliably know that you're consuming power 24/7, the storage of that power becomes less important because you're literally consuming it as fast as you can produce it.
For sure. That makes complete sense to me. The next one in the series is Bitcoin Fixes This. What does that mean, and what would you cover there?
Yeah, so there I went back to what we talked about a little bit earlier of really what brought me to Bitcoin, and really the idea, one, Bitcoin Fixes This is, something that the Twitter sphere,
it's a great meme.
It's a great meme, and it's this, at a high level, it's the idea that a stable form of money, or a sound form of money, or a form of money that's divorced from the state, that's not subject to the political whims of a few people sitting around a table, or not necessarily even political whims, that's not fair to say to the Fed, but kind of a limited knowledge base, or a limited scope of ability of a very few number of people managing the money of an economy that supports 300 million people. That as we shift to a world of sound money, of a stable form of money, that there will be a natural balancing effect that will solve a lot of the problems that people can feel around them, but maybe haven't identified is fundamentally driven by an unstable form of money or an easy form of money. So that's the high level context of Bitcoin Fixes This. But then specifically what I talk about in this piece is really, again, I think about the reason why Bitcoin exists is because ultimately, some very smart individual, forward-thinking people saw a problem that many people did not, and created a technology that created a solution for that problem. The practical reason why Bitcoin exists is because the forms of money that we're using today are not reliable, and are subject to not just debasement, but systematic debasement, and really debasement that the legacy system is inherent on in order to function. And so what Bitcoin Fixes This is about, and specifically in the gradually then suddenly piece, is the idea that Bitcoin fixes QE. Each time, and we're just starting to see, I don't know if we can officially say that what the Fed is doing in the repo markets is officially QE4, but QE4 will be announced in short order. In my view, it's inevitable at this piece. The ECB's already signaled additional QE. I don't think the Bank of Japan ever stops.
And I think they've even gone as far, the ECB, et cetera, as saying that it's kind of like the new normal, right? Like it's not just going to be another, limited point in time where there's QE introduced. It is basically this is now necessary to continue kind of the charade, right? Yeah,
and really, if people are interested in understanding that, the reason why that is because of the size of the fiat credit systems. The size of the credit system and the degree of leverage that exists cannot be sustained unless the base money supply is increased. The whole system is based on that dynamic of the relative scarcity of the base money to the overall size of the credit system. But then when you recognize that all QE is designed to do, or what it's designed to enable, is to allow an unsustainable system to be sustained, QE and the way that central bankers view kind of in managing their economies is, I need to expand the credit system, because if I'm not expanding the credit system, then I have a deflationary environment. The only thing that was worse than inflation to a central banker is deflation. And in this context, if they just let the system go, it would collapse on itself. And so that is the reason why QE is not just a tool that will be periodically used. It's actually a necessary function to the way that the existing system is constructed. And so when we think about Bitcoin, and those of us that recognize this problem and why this form of medium that is Bitcoin is superior to this legacy system that is, Fed puts more QE in so that the credit system can increase. We get to a situation where we have too much debt, and then we need to put more base money in, which is QE. That ultimately now Bitcoin represents monetary competition. If people believe that the path to economic stability or prosperity is central banks managing the money supply and managing the economy from central command, they have their legacy monetary system. But for those of us that are starting to see clearly and to see that this is a never-ending cycle, that we increasingly opt out. And so by Bitcoin having a fixed supply, that again, we all think about Bitcoin having a fixed supply, but really at a root level, Bitcoin supply is dictated by consensus. So while we think about it as a fixed supply, it's really only fixed so long as the market participants that are involved want it to be fixed. And then it so happens that a group of rational economic actors that have independently opted into a fixed supply currency system would not, in an overwhelmingly, large way, form a consensus to debase that currency. We basically now have monetary policy by consensus rather than by fiat. And kind of over the course of the 20th century, whether it was, the conversation or the debate between Hayek and Keynes, ultimately we ended up in a world where we have Keynesian and monetarist debasement of the money supply as the mechanism to achieve economic stability. That was always an intellectual debate. The Keynesians won. Now we have free market competition. We've got two systems that is every single day being evaluated by market participants all over the world, and the signal of value going up in Bitcoin is more people looking at this question and coming out on the side that, hey, if I was contributing value today, I would rather be opting into a system that had a fixed supply rather than one that I know is going to be debased. So kind of in that general context, it is, Bitcoin fixes this at a root level or at a fundamental level. It is presenting a monetary option that is an opt-out path for the legacy system.
Yeah, it's fantastic, and I think that's why people have gravitated towards that idea, which you just articulated. The last in the series is Bitcoin, not blockchain, which is a play on words, I think, of a lot of people saying, blockchain, not Bitcoin. Describe a little bit about what you covered in this last one.
Yeah, so, and then also just to say for all the listeners, it won't be the last one.
Yeah, the last one he's published.
Yeah, the last one that I've published. And so, again, this one is getting to, coming back to the center of if Bitcoin fixes this is, really the economic rationale for why Bitcoin exists and kind of addressing this problem statement between kind of what was something that we were all forced to opt into versus now having an option to opt out. That Bitcoin, not blockchain, is then going back and focusing on the technicals of Bitcoin. And it's helping, it's expanding upon the idea of why Bitcoin can't be copied, but then it's also trying to distill for people why a lot of people, I think, look at and I try not to reference the Bitcoin community, but for the people that have come to this view that Bitcoin is the only blockchain that works, it's the only blockchain that matters, there's this idea that somehow we have this closed-minded view, and that, what's the fun of this whole thing if we only have one currency to rule them all? And really, it's not an ideological belief. Like, it's not something that we just want. It's something that we have reason to based on first principles. And so what I walk through in Bitcoin Not Blockchain is trying to give people kind of some tools at a really base level as to how Bitcoin works, and then build up from those kind of base building blocks to then walk through the rationale as to, okay, now if you have this baseline as to how Bitcoin actually works at a technical level and how the currency interplays with the blockchain and what the blockchain actually is, then I can walk you back up to the first principles as to why we think that this then obsoletes every other form of currency. And so kind of walking into a little bit of that, or if I was to distill it down into ideas, it is that first recognize that Bitcoin was designed to solve a very specific problem. Mm-hmm. It was designed to solve a problem that exists in modern money, and that the blockchain was a tool that the founder of Bitcoin used specifically to remove a central third party from that equation. How can we validate and verify either the scarcity of the asset or that asset has not previously to be spent without a central party? The only way to do that is for all parties to have a copy of all of the transactions that have ever happened.
For sure. The thing that I think is so interesting about this is you're taking a single asset, right, which is Bitcoin, and you're coming at it from so many different angles. And some of it is you're disproving or arguing against the detractions. You're also kind of enhancing or highlighting some of the positive arguments. And so I'm very interested to see kind of how many of these you can write, right? And I think that there's a lot more to go, right? So I'm super pumped about it. Remind us where folks can go and read them. Yeah,
so all of the blog all the series is available at unchained-capital.com/blog, and you can there's a tag for Gradually Then Suddenly, so they're all listed there on the Unchained Capital website. And then I also each week you can sign up for the newsletter on the website, and then I also distribute them on Twitter each time I release them. So we'll be out with another one next week, which will be Bitcoin is not backed by nothing, which is one of the things that, again, a lot of the times that I write, I think to the institutional audience that one, it's a broad resource that anyone in Bitcoin that has friends that are interested can point to. But then we're also thinking about educating future clients of Unchained. So it's creating a repository that as each person is going, down the rabbit hole, these are all questions that most people come to in the past and have to overcome to kind of come to this point of view that Bitcoin likely will be, and I think the probability is increasing with every day that Bitcoin will be a global reserve asset.
For sure. Where do we go from here, right? Like, what does the future of Bitcoin look like, and how does that unfold or evolve, in your opinion, given what you know today?
So, one, I think that it's increasingly not practical for people to ignore Bitcoin. So I think that we're getting to the point in time, and I know that through Morgan Creek, you guys have started to get institutional investors involved in not only having exposure to Bitcoin, but then also infrastructure that's being built around Bitcoin. I think an economic system that has a purchasing power of 200 billion, and each time that it doesn't die, and then people see that it continues to rise in value, they can ignore, fewer and fewer people can ignore that reality. And then as Fortune 500 companies get involved, like Square and the CME, that provides a lot of cover for us, where it's not this medium that's just for criminals. It's not this digital nothingness. It's actually there is rationale and there is reason as to why there's fundamental demand. I think that where we go from here, I think that one, we recognize that still very few people hold Bitcoin. The people that do, for an even fewer number of those people, does it represent a significant portion of their wealth? That educational resources are continuing to increase and that people are, kind of in an exponential way educating themselves on Bitcoin. I think that we're gonna see a really interesting dynamic between Bitcoin adoption and in the cycles of QE. I think that ultimately the state and central banks are going to be, there is going to be a fight in terms of control. And I think that, there's no crystal ball in terms of how that fight plays out, but I think that, kind of heavier regulation, trying to, whether it's the Fed, combining with the ECB or the BOJ to in some way try to deregulate it out of existence, I think it's going to be very difficult to do. I think the positive side is that they only probably get there until Bitcoin, or not until Bitcoin represents $1 trillion of wealth or $2 trillion of wealth. And I think the path that, where we go from today to there is increasing education, but then also building infrastructure. Like a lot of people look at Bitcoin and say like, oh, this could never be a form of money, but what they don't recognize, or I don't want to say they don't recognize, but it's not looking at the long game, and it's thinking a very short-sighted context of, Bitcoin went from zero to where it is today in 10 years. If we think about the internet, we have to build infrastructure to increase usability, increase security, kind of give people confidence that when they're storing this, they're storing it securely. So I think the next phase is going to be, I think we're still trying to solve custody solutions that work, and so that's what we're focused on at Unchained. I think we're going to see a lot of competition in that space and a lot of different models tried. But as we perfect those models, that gives people increased comfort that whatever assets that they store in Bitcoin are secure. As people gain conviction in that, then that further increases adoption.
For sure. I think it's a very clearly articulated path and one that's very likely. Before I finish up, I always do rapid fire questions. What do you think is the most important company in Bitcoin other than Unchained?
Square or Trezor?
Oh, Square.
Yeah. So an on-ramp and those that are building hardware to help people secure their own Bitcoin, and that allows Bitcoin to be decentralized and allows kind of for the properties of decentralization and censorship resistance to increase over time.
So somebody was literally tweeting at me this morning saying, has anyone ever answered with Square? And I said, I can't remember if someone has or not, but there would be a very strong argument. So I completely
didn't
agree.
see that. So
yeah, that's even better.
Yeah.
What's the one regulation you would change or improve if you could?
Either the qualified custodianship or AML KYC.
Yeah,
I think that those are both areas that, one, we are in this world where we are trying to, as a, not necessarily as a collective, but via competition, solving different models as to how to secure Bitcoin, requiring a lot of regulatory overhead to, just put a regulator's view as to what in Bitcoin qualifies as someone that can actually secure Bitcoin, is trying to fit a square peg in a round hole. And then on the other side, I think that, and this is something that we struggle with as a company, as Bitcoiners, I think everyone is increasingly conscious of privacy and how important that is. But then as a financial institution, we are required to comply with certain laws that I think inevitably and really undebatably create risk for a lot of law-abiding citizens. And so, it's the unintended consequences of those AML KYC policies that create risk for people, while maybe well-intentioned, or there's probably a range of people who think well-intentioned or not well-intentioned, but there are unintended consequences. And so, but those are the rules, and so we are, as a financial institution, we comply with them. But I think that we are now looking at a new medium, and so both on the qualified custodianship and AML KYC, I think we have to recognize kind of what it is what the subject matter is that we're dealing with, and what is the right way, whether there is a right way to regulate.
For sure. What's the most controversial thought you have in Bitcoin? So when you say it, the most people will be like, "Oh, I disagree with that."
Okay, so a lot of people believe that everybody gets to define Bitcoin by running a full node. I don't. I think that what a node allows you to do is assay whether something is Bitcoin or not. And so, it may be splitting hairs, but, I think about it in the context of, you can change Bitcoin and you can fork Bitcoin. If you do not win a consensus, then it's not Bitcoin. And so that's the first principle that I use to say, a node doesn't allow you to define Bitcoin for yourself. It just allows you to assess whether you're in consensus of the network.
What's the most important book you've ever read?
Maybe the Bitcoin Standard. So
Safe Dean won't mind that.
Yeah, I mean, it's definitely up there. A World in Debt is up there, and then The Road to Serfdom. The Road to Serfdom may be, I think, kind of from on a societal level, the most important.
Yeah, I haven't read that. I need to pick that one up.
Yeah, I definitely recommend it for anyone that's, whether you're interested in Bitcoin or not. Hayek is a economist, but he's a philosopher as much as an economist, and it really, The Road to Serfdom provides a really first principle view as to why socialism fails and why it is so not only in contrast, but is in opposition to individual freedoms. So I do recommend that to everybody.
Got it. I wrap up each podcast letting the guests ask me one question, but first we talk aliens. Believer, non-believer. Did you go to Area 51?
Did not go to Area 51. Don't think about it a lot.
Okay.
I think just on probabilities, probably.
Yeah.
But
I find that's the most common answer, right?
Yeah.
It's just, look, who knows? But on a mathematical basis, there's a lot of space out there, and it is highly likely more than anything. What one question do you have for me to finish up?
What is the first state or nation to buy Bitcoin or adopt it?
Okay, so two different questions, adopt versus buy. I'm going to go out on a limb and say that we're recording this in, September 2018 or 2019. I'm guessing a state's already bought some. I don't know who, but I would have some kind of likely candidates. But my guess is that somebody somewhere has bought some, even if it's a little bit, and are holding it. I don't know if it's in central bank reserve, right? Because I think that might be a little aggressive, but definitely states have some Bitcoin, right, through Caesars and stuff like that. But actually actively purchasing it, I think probably has happened. In terms of adopting it, I think it's going to be the reverse of what everyone is thinking. So it's not going to be the developed world. It's going to be some developing country, maybe one that suffers from hyperinflation, maybe not. But it's also likely going to be attached to size. So the smaller a country is, probably the less bureaucratic it is, which also means that there's less risk because the least amount of people are going to be subjected to the experiment, if you will. And so, you see these countries like the Maltas, the Marshall Islands, all those things. I don't know if it's that small as much as it might be a country with, kind of low single digit millions of people. And the thing I'm waiting for is the first country that gets a Bitcoiner as the leader. I think a lot of stuff will change very quickly, right? So it's almost like you have to have somebody at the very top which believes or understands, and therefore the top-down approach will accelerate their embracing of it or their adoption of it.
Yeah, that makes sense. I mean, I think that we're sitting here in Wyoming, so the state here is doing a lot of things to create regulatory certainty for crypto and Bitcoin-related companies. So I think that it likely is some entity that has. Or some state or nation that has, the kind of forward thinking, kind of is investing the resources to attract the type of people, and that as a consequence of education and familiarity that they see the benefit in terms of securing a portion of whatever is in their treasury reserve. So it'll be interesting to see.
For sure. Where can people find you? Twitter, elsewhere online?
I'm generally only active on Twitter, so Parker A. Lewis, at Parker A. Lewis on Twitter. And then follow the Gradually Then Suddenly series, reach out to me. Love to engage. So.
Awesome. And let people know, or let Parker know if you're going to be in Austin, Texas as well. So
yeah, we do host the Austin Bitcoin Developers Meetup. Justin Moon organizes it, but we host it at our Unchained Capital, hard to say headquarters, but our office down in Austin. So if you're in Austin, we've got a increasing number of Bitcoiners there. So look us up. We're around.
Awesome, man. Thanks so much for doing this.
All right, appreciate it.
Hey everyone, Pomp here. If you like this episode of Off the Chain and want to help us take crypto to the top of the Apple, Spotify, and other podcast charts, please do us a favor and rate, review, and subscribe. To review, simply go to the Off the Chain homepage, scroll down until you see the 5 blank stars. Taking 15 seconds to fill those stars in and leave a quick review goes a long way in helping us take the entire crypto ecosystem to the top of the charts. I appreciate you listening and see you next time on Off the Chain.